following is an update and technical analysis on MicroStrategy, a company of the technology sector and software based upon the monthly interval, the much larger scale to the entire landscape here, where we had this nice reactionary high off the .com bubble highs, and here we are potentially reacting amongst that key inflection point, where fundamentals are screaming fragile, where it's over-reliance on the spot price of Bitcoin, leveraged balance sheet, and vulnerabilities to macroeconomic shifts could make this stock a ticking time bomb, where the disconnect between its market price and intrinsic value is starting to glare. And for the short case writes itself, where a company over-leveraged to a speculative asset, usually in a tightening liquidity environment, with a CEO who refuses to acknowledge risk, the writing is on the wall and it's written in red. And here we are, some key technical structured levels that may play out here in the coming months or the coming weeks. We have a big primary reactionary uptrend line off the January. Major reactionary lows here, and that has had some major reaction right across that entire sphere here. Back in my old playlist, we had a concealed uptrend line where we had a great short setup, and we timed a pretty good 60% crash off this key inflection point the last time I shorted it. And I believe we are in a very vulnerable technical structure of the stock now, correlated with fundamentals officially. On a breakdown sell signal off this primary minor uptrend support level off the September major reactionary lows, that has had plenty of major reaction. We took that level out in correlation of its 50-day moving average. We snapped it, back tested off this key 337.43 level, back tested right into the primary reactionary uptrend line to the button there, and that was rejected impulsively on a solid red infused candle, big breakdown, so close below that key inflection point. And here we are on a 13% ride move to the downside, and I believe that this is a breakdown solidified sell signal on the daily realm with a huge volume at price profile around this range, with a vast majority of the masses bought around this key 441 range on a potential breakout of that monthly price resistance level that I showed you from the .com bubble era. That could be the green light for a ton of bull traders and or long traders trapped in amongst this key breakout that had ensued in the previous month ahead. And here we are. They could be convictedly trapped within this key mechanism and a complete unfilled and unchecked gap below. Make no mistake about it. That could be gearing in for the next target, which would be a 14% crash to the downside on a perfect backfill, down to 223.42 for a 31% crash in correlation of its 200-day moving average, ultimately down to 173.89 for a 46% crash. And ultimately, if things get really bad, on a reflection and revisit of the primary reactionary uptrend line off the January lows for a 57% crash. Wild as a train crash sounds of that magnitude. Do not underestimate how quickly this trade can completely unravel. And for the bullish snapback counter trend rally scenario, you could have some longs stepping in on some short covering on a big counter trend snapback rally back into the primary uptrend line support level, for which would look exceedingly bullish on a big wicked rally move to 18.4% move to the upside, only gearing in on a triple transitioning price resistance level in correlation of its primary reactionary uptrend line, 388.64 price resistance, and its 50-day moving average price resistance level, gearing up for a great risk-reward ratio for any entry short trades or an add-on to your existing short trade position on a backfill of the gap for a 27% crash, down to 223.42 for a 40% crash, where this could be an opportunity to profit from the unraveling of a grand illusion. The music is fading, and when it stops, there'll be a grand rush towards the emergency exits.